Hi everyone, this is Anne-Marie and this is the SPY report for Monday, April the 29th. And we're going to start with a weekly chart because we're going to look at things with a little bit more analysis. Start out with a wide angle lens and then bring that in just a little bit tighter as we move towards the actual intraday levels. All right, so I want you to get a good grasp of what's going on. If we take a look at the market, we can see that it's still trending upward a great deal, except as we get to the very top here, we'll notice that we've got quite a bit of sideways action. Clearly a line of buyers supported right here at around 153.48. If we lose that level, there's going to be trouble here. It is going to roll over. Now notice we have the ergodic oscillator here for the SMI, and it is peaking and beginning to roll over. On top of that, the DPO, which we have set at 15, is also getting a little jagged. Now both of these things are suggesting that we have a little bit of rollover weakness, but if we look at price patterns, it's pretty much a set of piano keys here, right? One color, the other color, one color. So what we want to do is see what's actually happening here. Now the range of motion, this is still overall from open to close, with the open and close markers the only important. It's still got the widest range 3 weeks ago. So it started to tighten up a bit this prior week. That would be 2 weeks ago. It dipped down here, but still held above these levels. So intraday, or intra-week, meaning watching things on the daily charts, we're going to see that 155.08 is going to be the number that we have to watch. All right, let's move in and take a look at this on a daily chart, and then we'll see what kinds of formations we're looking at and where we need to go from here. Notice the different colors of the SMI and the DPO. Again, these charts are by Motive Wave. I would recommend this charting platform. It is a very good one. But notice what the days have given us. We've had these very, very unresolved decision active candlesticks, right? So we've got doji style action every 1, 2, 3, 4 of these sitting in a row. We are still sitting above the weekly and the monthly VWAPs, and so that's something pretty important. We'll see these levels that I've been marking, and I did mark these from the weekly chart so we would know they are extremely important in terms of day close events and eventually week close events. And so what we're going to be staring down is the actual movement that we have here. Above this level, 158.76, if I move it up, I am thinking it's actually 158.80. A breach of that area tomorrow is going to bring in a long. However, market action is suggesting that it may chop around just a little bit more before it makes a decision. All right, so if we take a look at where the SMI readings are and where the DPO readings are, we can see that these things look like they're moving up just a bit, but all in all, they are sitting in a relative neutral zone. Notice what happens when the DPO sits in regions like this. See how this DPO is dipping down just a little bit, and we have price divergence that is pushing up. When DPOs and oscillators particularly sit around a neutral zone, meaning not in the extremes on one way or another, they are very, very unreliable, giving us directional momentum. But what we do notice is that because of that, there's a lot of chop. And so we'll be watching for choppy action here as it resolves and decides what to do. So let's go to the 4-hour chart so we can pick some levels out and decide what to trade. I would advise using the at-the-money options if you do use options to trade these levels. Use the at-the-money options. Those are the options that are just inside the money or the options that are just outside the money. and make your trades from that perspective. Don't go too far out because we really do not have a lot of active momentum. The trick to using an option properly is to understand that at the time that you use it, if you say are selling premium, then you want the SMI, you want the DPO to be in the neutral zone, right? You want drifting momentum someplace that you're not going to have a great big risk of your option ending up in the money if you've sold the premium. If you've bought the premium, you really do not want to get involved when things are sitting in the neutral zone. And so here we need to set the at the money option so that the little moves will give us whatever it is that we need from a premium perspective. Notice this gap fill event right here, pull back into the region, and now we have this resolution period. What's the trade tomorrow? The trade is below this level here of 157.55, and let's duplicate that quickly. It's going to give us a pretty clear short, 157.54 sitting underneath there. Remember, the pivot regions do determine quite a bit about where it is that we go. Notice how we sit here at support level 1. Losing support level 1 means that we will drift down into the support regions below that. What are those? The weekly VWAP, support level 2, support level 3. Those sorts of things. And we have a gap sitting here. Now, the gap coincides with the monthly VWAP. So if I want to look at that and say, hey, listen, I wonder what it's going to do for the next couple of days, if it's not got a ton of directional momentum, it is going to hit that region right there that gives us the monthly VWAP. All right, so we're going to be looking at these levels really quite significantly over the days ahead, particularly tomorrow in the trading day. Notice this acceleration up here. Price has moved down. This is still moving up. The DPO is flattening out. What this means to me is the chart is going to meander a little bit sideways, so it works off some of this overbought, in parentheses, overbought formation. It should come back into view. When the chart gets high like this, we do see it rotating over, and when it gets low like this, we do see it cresting upward. Now notice the DPO sort of leads the chart, so we've got the dip down here and the lift up, and then the SMI, this one is the ergodic. The SMI ergodic is pointing to the upside. We've got the same sort of thing. This is pulling back, that's still moving up. So we should see a little meandering about before the chart either resumes to the upside or it comes back to fill in this gap area. That's what we'll be looking for. Finally, let's take a look at the 1 hour chart, see if we see anything in the mix there. Notice this. Wow, that's right at the pivot. Very, very interesting. Very interesting. Hey, listen, the bounce off the pivot regions, I just looked at this, the bounce off the pivot regions should give you upside momentum if it holds. Watch for it to go into R1 to R2. And then the midpoint between R2 and R3, because there's a line of sellers sitting right there. If it moves to the upside, you're in great shape. If it loses the pivot, wait for it to clear this congestion right here at 158.06 before you consider taking the short into the weekly VWAP. All right, that's what we need to look at from that perspective with SPY. Let's take a look at the IWM. We'll look at the weekly chart here, just like we did before. With these others, we can see that the IWM looks a little bit different to SPY. Of course, another very tradable, highly liquid instrument. And so we'll look at this and we can see that instead of being sideways, this is actually drifting downward. Now, is it a bullish flag that we're looking at? Maybe it's holding broadline support in these particular regions right here. Let's take a look at the price points. We can see that a clear line of buyers are supporting this particular level, right? We can also see a clear line of sellers really getting pretty active around that particular region at 93.77. What happens in the middle is extremely noisy, and it seems like this noisy action really also has a clear line of buyers right around there. All right, so we'll be looking at those particular things. Notice, again, the formation is dipping downward. Now, the story is, very often, the IWM does mirror the Russell, and that is also the TF that we watch. And the TF often leads the ES, which is a mirror of SPY and the SPX. So when we're taking a look at this and we see, oh wow, this thing's rolling over, what's it rolling into? As long as the DPO stays above 0, it means there's positive momentum and positive price action still available for us in the charts. This, however, this rolling over tells us that momentum is adrift. Now we can see that from the price action because literally there's one replacing the other, right? The candlestick is replacing the other, and the bearish side is still wider in range than this, right? From open to close. Even though the range of action is a little bit bigger, from open to close alone, we can see that this negative candlestick is still bigger than this candlestick here. So this looks like there's a little negative action on the way. Let's look at it a little bit more closely in terms of the daily chart. Bring it in here. And we can see that it's pretty undulating, right? This could be a little bit of a shark pattern, actually, and that would push it back to the upside, or it could be one of those ugly widening megaphones with some slope, right? Because we've got action that is widening from here and here. This is not a tightening action. Volatility is getting bigger with these waves, right? Because they're retracing large amounts. Now, that being said, notice there's 100% retracement on this wave. And then this wave is longer and deeper, but maybe we'll get another 100%. There's clearly a line of sellers sitting right there. At the very top here, we can see them above a little bit more clearly when we start looking at the day, right? But that's up at resistance level 3. This one's at resistance level 1. This one here is at support level 4. And this one is well underneath the formations that we need to pay attention to. Now let's take a look at the SMIs and the DPO and see what we've got. A lot of negative action here, no divergence particularly. It is moving still around the 0 line, but notice this arrow. See how it's inflecting downward. Here again, here's the SMI coming into the 0 area. Does it reverse and stay negative? Then that means that what this is looking at is most likely easily a test of the VWAP. So let's get into the 4-hour chart so we can look at the levels. Again, it's always the at the money option that you want to use if you determine that options are what you'd like to trade instead of the ETF itself. There's a lot of liquidity in here, so it's really a pretty nice option to trade. But we want to take a look at these things personally and figure out what the rhythm looks like. All right, sitting below, we've got negative sloping action, but sitting below at support is support level 2 and the VWAPs, the weekly and the monthly VWAPs. There seems to be, to me, a lot of support sitting here. So if it loses support level 2, it's going to come down and grind here and chop around. This probably is not going to be good trading space until it bounces back up and holds support level 2. If it pulls down, bounces off of the VWAPs, and then comes back and holds this support level 2 at 92.30, it's going to be a long into support level 1, the midpoint between the pivot and support level 1, and then finally the pivot. All right, this action here is going to be a little bit of a suction cup. If it loses these regions, notice you can stair step these trades. If it loses S2, you can take it short here, but it would be risky. If it loses the level or chops around this level and then makes another lower high, remember what you're looking for is lower highs and lower lows to repeat themselves so that you find yourself in a high probability trading formation, a formation that will repeat itself with a strong level of accuracy. And so, what we want to do is make sure that we are trading in the formation that is most reliable. So if it fades here, you know you can continue the short. What I like to do, if things break down in a nice consistent form, I will take a 1/4 size position if it loses that region, and I will not add until it fails this area and gives me more traction. I know that it's going to try to come down and really finish filling this gap. This gap still has not been filled. It's a few pennies shy of it. And so if we lose the S3 level, we should easily get into this gap again and fail it at least. Remember, the 50% rule says that we should be considering what it is between the halfway point of, where is that? One and the other, right? And notice where this stopped the last time was pretty much essentially halfway between these two, which is shy of the gap fill. We're going to put it at the gap fill, but I want you to keep in mind that the midline between support level 3 and 4 could very easily be something that we would test. Now, on the upside, of course, gets above resistance level 1, there are sellers that are sitting actually a little higher. So we're going to shift this up here. So 39.92, here's what we can do. Here it is right here. We're going to come up, dance around the pivot. If we hold the pivot well, right, you can look at your 1-hour chart. Let's go directly to that, actually. We'll be able to help figure out what the rotations look like from the candlestick formations. When we take a look at these levels right here, we can see that we are really trying to close candlesticks at the halfway point above 93. If you close a candlestick, if you have a 1-hour candlestick that closes above this region, 92, 97 to 93, you are very likely off to test the pivot and off to get to this halfway point right here. Very likely that we get into the resistance level 1, and then the halfway point between resistance level 1 and resistance level 2 is going to be the next target for us. Listen, flat SMIs, flat VWAPs. Flat VWAPs mean we have momentum that is not reliable. When you have this sort of thing, you want to trade with those at the money options, not significantly out of the money, because you will lose money that way. And you want to make sure that you time your trade properly. Watch it come off support. Watch it fail resistance. And then sit tight and watch the rotations. Am I making higher highs and higher lows? If I'm long, am I at least making higher lows? If I'm at least making higher lows, I know there's a chance for me. Watch for the weakness. Watch for these levels. Take the at the money options and be careful in a market with diminished momentum. Notice this area here is showing chances of a little bit of a pop. So this could easily push to the upside, which is very, very interesting to me because I really think that we should chop sideways. All right, good luck trading today, and look for the SPY update tomorrow.